such a beautiful city, and welcome to Cairo, and Egypt and Sharm el-Sheikh for the conference. I believe sustainability and what we have learned as a regulator from other regulators, not only in terms of what they have done, but as well of what they haven't done when it comes to regulating ESG and putting frameworks for ESG reporting. In Egypt, I believe in Egypt we took a lot of journey when it comes to ESG, governance, and other aspects. So most probably I will. So we took a long stride when it comes to ESG reporting, and as well on the disclosures pertinent to all ESG aspects in the Egyptian market, and learning from other regulators, definitely other regulators that have been adopting several aspects when it comes to what to be reported and what not to be reported, what are the different reporting initiatives, and how on a gradual basis we started incorporating some of these reporting aspects in ESG in the listing requirements, from the board representation and the structure of the board, what is the minimum level of information that is being required for disclosures. And recently the FRA and being implemented by the EGX issued a couple of decrees, one associated with the listed securities and listed companies, and the other one associated with all financial sector, non-bank financial sector operators in the Egyptian market that are required to issue the reports pertinent to environmental aspects are based on the TCFD reporting initiative. So the starting point when we're talking about reporting of sustainability aspects, there has to be a baseline. The difficulty that you're not overriding, are you sure? Okay. The difficulty has always been which reporting initiatives to choose, which ESG principles to be adopting and disclosed into the market. And then you had to make some choices. We chose some reporting initiatives compared to other markets that have chosen some other reporting initiatives. And here stems the importance. I believe John Paul, my colleague at the chairman of IOSCO, will be discussing extensively the role of ISSB in having this global baseline for reporting, and hence comparability is very important. I'm not trying to hijack what John Paul is going to say, but maybe steering the direction around this important matter. Regulators need to understand that, yes, you can have some soft powers, it is there, but eventually, if we're going to see a quantum leap in the level of disclosures, pertinent to ESG and the implementation, it has to be mandated. Some regulators take the non-mandatory approach, so give it in terms of guidance. It is quite good, I have to say, but is it sufficient? I'm not sure. We took in the Egyptian market the concept of complementing the mandatory approach with significant capacity building, because whatever you're going to put in terms of rules and regulations, if you don't ensure the sufficient capacity and knowledge of the different players in their disclosures, it will always be problematic. It will be a cosmetic reporting approach that everyone will be submitting the ESG, but these reports might not be beneficial to the end user, which is the ultimate purpose of serving and requiring these types of information. These types of information on ESG, on the different components, environmental, social responsibility, and governance, the ultimate point of it is to support investors in their decision-making process, and hence over clustering the market. Underrepresented.
So
if I do it like that, okay, so you need to make it from a singing perspective. So okay, we'll try to sing here. And here is whereby we got to know what other markets have done and regulators, and we took our stance, whether it's right or wrong, but this is the stance that we took as the FRA. Thank you.
Thank you, Dr. Mohammed. So we've learned that it's really important to take some ideas from other markets, but IOSCO has the authority to drive change further. What's been the approach to establishing structure to this topic around the labelling issues and categorising finance flows for outcomes? What are the lessons learned there, Mr. Jean-Paul?
Thank you. Can you hear me? Yeah? Okay. Like this, okay, like a pop singer. Okay. I'm not sure that I look like singer, but okay. Let us try. No, first of all, allow me to thank Mohammed, my colleague and friend chair of the Egyptian Financial Regulatory Entity, for this excellent initiative. I think that we need to discuss about the added value we can have about the journey, the extraordinary journey related to sustainable finance. And I have to tell you, and I'm used to saying that for me and for many supervisors, the starting point of all this work stream is rather unique. Most of the time, people like me, we have to be intelligent when we draw lessons learned from a financial crisis, if we want to have a forwarding. This is not the case. As such, there is no financial crisis. At the same time, and that's something very fascinating to me, there is an incredible positive demand-driven challenge. Who is the starting point? Not the political decision maker, not IOSCO, not FSB. It's just John and Mary in the streets, and not only in the city of London, but really John and Mary in the street, who would like to invest in product which can be matched with the ESG expectation. That's extraordinarily positive. But at the same time, there is also a negative challenge. And that's the reason why, of course, we've been asked to give a comment about greenwashing. Let us be clear, the best way to avoid greenwashing is to think like John and Mary in the street. John and Mary in the street, non-sophisticated investors, they are not interested at all in political decisions. They are not interested at all in ego in order to have a dispute between different frameworks. They don't like alphabet soup. And the best way to avoid, I would say, greenwashing is to try to build together a global baseline when we speak about disclosure and also information related to credit. That's what we are doing at IOSCO level. We support a lot of initiatives taken, of course, by Bloomberg, TCFD, but also, for sure, by SSB, but I will come back for the second question. About greenwashing, let us be clear, I would say. From day one, I belong to the school of supervising, saying, okay, there is a positive journey, but don't make the mistake to think that everything is fine, because we are speaking about trust. And trust is there, but the day that trust will be disappear, we will lose the momentum. I would say, let us be clear. Good news, I would say the industry is making the jump. I presume that many of you heard about the decision taken by Morningstar some months ago to drop 1,000 UCITS because they were no more complying with the ESG expectation. That's a good news. Bad news, if Morningstar and all the competitors, we do that every week. That's the reason we need to have a dialogue between the industry and the world of supervising. The fact that we are discussing at a level of IOSCO, it means, I would say, a capacity to speak, I would say, at a global level. We have, as member, more than 130 jurisdictions able to supervise at domestic level 95% of the financial sector with various capacities. So it means that we have the capacity to provide for capacity building, to understand what are the different jurisdictions. The majority of jurisdictions at IOSCO level are in fact emerging countries, and the chair of the GEM is there, is Mohammed, and thanks to him and his staff and the colleagues. What about products? Let us be clear. I come from Belgium. I am the head of the financial supervisor in Belgium, so it means we are a member state of the EU. There are also very interesting, I would say, initiatives at EU level about, maybe the famous Article 6, 8, and 9 of the fund regulation in Europe. It means light green, dark green of business. Positive news for me and my supervisor, colleague supervisor of ESMA, I would say the shift is there. In less than 1 year, the majority of the net asset value of funds located in Belgium are now compliant with light green expectations. A challenge that bad news would be to think that as such, we would think that it's a label. It's not a label, so it means it's about financial education, it's about guidance, and that's exactly, and that will be my last comment, what we are doing at IOSCO level. As you maybe know, we issued last year 2 reports addressing greenwashing, notably on asset management and ESG rating, and we noted that greenwashing can occur throughout the investment value chain. And any market participant, issuer, manager, financial advisor, ESG rating agency, and data provider can engage in this behavior. Then we issued yesterday a call for action which contains a set of good practices targeted at industry. And of course, and I know that there are many representatives of the financial industry in this room, industry engagement is crucial to this work. For instance, we conduct an industry roundtable in July. More than 130 participants were there, so there is a demand to that. And also, let us be clear, the role played by the banks is instrumental in illustration. Because banks, it means to try to be a kind of bridge between clients and, I would say, product. It's something that we find in many jurisdictions, again in Europe it's called MiFID. And that's the reason why I would say we need to be on board, and that's we are doing. For instance, for the time being, we are conducting a roundtable on supervisory practices, and the objective is to be there whenever it's useful that IOSCO could be on board, not only for the positive agenda, which is quite clear, but also the negative aspect to be up.
Thank you, John Paul. And so, on that note of products and funds and greenwashing and the approach of investors, that puts a lot of pressure on the exchanges, right? So I'd like to turn now to Rami to give us a little bit of insight around how the Egyptian Stock Exchange is addressing ESG and any thoughts about mandatory reporting.
Okay, let me start by saying that it is already mandatory in Egypt to report on ESG, and we're going to see the results by the first quarter of next year, maybe the second quarter for the financial year 2022. EGX is doing many steps in this regard. As Dr. Ray said, capacity building is key for investor relations in all companies in order to start developing the knowledge and access to information for the IR officers to access this kind of information. ESG information is not only limited to an IR officer. You have to go into the CFO office, you have to go to the procurement, you have to go to the IT. So it's a consolidation of the entire operation of the company itself. So we're trying to educate IR officers on this regard and how they can access information. On another angle, EGX is definitely investing into information. And the most important part of the puzzle here is the availability of information for everyone. Whether it's TCFD requirements, we're looking into partnering with international organizations, global ones, in order to avail such solutions for the entire market to start applying in their information and allow access to that. The main problem of our part of the world in the information is that it's not comparable. And here I would like to stress again the approach that ISSB is doing, because before that we had several ranking and rating agencies. Everyone is ranking differently and everyone is putting differently the company. So you can find the same exact company being rated differently between Refinitiv, between MSI, between Analytics. So you're going to see a lot of things that is different. So unifying the comparability will definitely help investors to understand better that kind of information. On the funds area, we have seen in the last 2 or 3 years, a lot of ESG funds have been developed in Europe specifically and North America, and all of these funds has to flush all these dollars somewhere. So they need proper information, they need proper quality assets, they need us as exchanges to start highlighting these companies and creating ESG indices. We already in EGX, we had our ESG index since 2010. I think we were the second or the third country globally to issue this index with Standard & Poor's. And definitely we're doing many steps in this area. We want to enhance this area. We want to create access and more creative products around that to trace the index as well. So a lot of products is coming on that front when it comes to EGX, but we are trying to focus more on creating a proper IR in our listed companies in order to develop the information and the quality of disclosures that is being recommended. ESG reporting is no longer a nice to have part of the annual report. It has become an actual thing that investors are looking at and investors are analyzing, and we need to provide this kind of information. I hope I answered your question, brother.
Just to follow up on this very briefly, what we've seen happen in the evolution of the ESG industry is, first off, investors were collecting data on operational footprint activities, so CO2 numbers relating to the environment, board governance numbers of length of tenure of directors, of gender diversity, and looking at all of these factors. But there was sometimes a pushback that these metrics weren't delivering outcomes. They were sort of giving us information, but investors were a little bit stuck on knowing what to do with that information. Do you think that we've moved on quite significantly since those days? How do you think investors are really using information today? And that's back to Rami.
Okay. So investors are, let's take one step back. Risk is basically comes from the absence of information. So availing the data is number one. Yeah, for example, before joining EGX, I was heading the Arab Federation of Capital Markets, and along with Refinitiv, we issued the first Pan-Arab Low Carbon Index, for example. And when we established this index, and we've seen a giant like Aramco, which is the biggest company in the world actually producing CO2 on that index, I had the very basic question: why do we have it on the index? And the answer was very simple: because they have proper disclosure, they know what they're doing. So they have to take the chance in order to be represented on the index. So this is what we're trying to show for the investors. It is not about bringing in the information and just letting the investors do what their choice. We have to bring them into ETFs. You have to avail certain products to allow them to exercise. Not everyone will understand ESGs, and it's not the focus of the normal retail investor. Maybe it's not the focus of some of the financial institutions to understand. But it would require a certain level of learning curve that is coming, and it will happen. And we see the specialized products is the best item for that.
Thank you.
Thank you.
So moving now on to a bank's approach to ESG and just some thinking around the industry as a whole from the bank's perspective. Ahmed, how is Mashreq, or how are you thinking about the industry as a whole for starters on ESG and what needs to happen, and then any considerations that Mashreq is taking into account on greenwashing?
Well, I mean, let me start by what you have mentioned earlier with respect to the sustainability backlash and what we have seen in the recent greenwash incidents and its impact. And in my mind, this creates definitely a trust issue across the entire ecosystem. I mean, to put it in perspective, in UAE, for example, people have full confidence in the government and businesses, and they trust that we would always do the right thing, particularly when it comes to social healthcare related issues. And we have seen that during the pandemic. But when it comes to climate change, it's a completely different story. So there is definitely distrust in the businesses and CEOs when it comes to their acts with regard to climate change. A recent survey, for example, have indicated that only 43% of the population trust CEOs and businesses as spokespeople when it comes to climate change. I mean, for climate specialists and scientists, and I know that many of them are here in the room today, they will feel relieved that 77% of the people trust them when it comes to climate change. How do we address this? In my mind, again, I think it's about having climate drive hardwired in our values and business principles. It has to be about doing the right thing. it has to be about supporting the drive from a humanitarian point of view, rather than having to meet a regulatory requirement or a publicity stunt or meeting an organizational tick the box. In Mashra, we invest heavily in that regard, in terms of raising awareness of our people, training our people, and this starts from the most junior level all the way up to the board. Educating our clients is equally important as well. And we work very closely with the regulator to bring this awareness and trust in the market. The regulators will have a huge role to play, and we have seen that in many incidents. India is one to name a few. We have seen them introducing the mandatory emission reporting earlier in the year. They're implementing that in coming April for all listed entities, and they will roll that to the private sector as well. This will bring greater transparency in the market and hopefully will help restoring trust into the market.
Thank you. And so the City of London has been a leader in green bond issuance and thinking about the green market. So what can we really learn from the experiences of the City of London and how it's been beneficial to the market there? Handing over to you, Chris.
So thank you very much, Zoe. Well, first of all, I'm not a regulator and I'm not a bank. I'm that dreadful word, a politician. But hey, every panel has to have a politician, so you've got me. Look, let me just talk about greenwashing. First of all, my general sort of views on it. Is there an issue with greenwashing? Yes, I think we all accept there is an issue with greenwashing. However, when you think about what a company or a business's greatest asset is, it's actually their reputation. And therefore, I tend to take the view that businesses most businesses don't deliberately want to greenwash. It's not to say there aren't bad players, there'll always be bad players, but in the main, I think it's born out of a result of the inefficiencies in the environment those companies operate in, rather than genuine ill will, if you will. And I think sometimes it's also down to ignorance as well. Now, if you talk about regulation and where can regulation help with the challenge of greenwashing, first of all, I've always believed that high quality, sustainable finance regulation and economic competitiveness are two sides of the same coin. You need both to make it actually work. And that's why we in the City of London are very supportive of one of our two financial regulators, the FCA's approach to greenwashing at the moment. They're coming out with guidance to businesses to navigate the world of green investing with proposals that actually seek to help investors better understand what it is that their money is out there to achieve. And they're classifying this under three labels, which we think are pretty helpful actually to the sector. Firstly, funds that currently hold exclusively sustainable assets are being labelled as dark green. Those that encourage their holdings to become more sustainable over time are referred to as transition funds. And the third label they're using is that those that are focused on having a positive real-world impact are known as positive impact funds. And it sounds quite simple, but in a way that classification, I think, does help the sector to really understand where they can best target. And that's why we are supporting the FCA's policies that they've come out with.
Thank you. So before I move on to our next topic, which is the standard setting piece on disclosure, I'd just like to turn quickly to products and product on the dark green transition and impact areas. It does sound very straightforward, which raises the question, why haven't we done it sooner? And the growth of the the label product market has been quite significant, but we know that there's still more to do. And in the beginning, we were talking about labeled products as being a form of transparency. Can I turn to Rami very briefly to talk about the views on whether or not product labelling has been beneficial, and then I'll turn to Mohammed and Jean-Paul to pick that up as well. But starting with you, Mohammed.
I'll start, right? Yeah. I do believe, yes, product labeling has been beneficial. It's maybe not up to the expectations, but definitely it's been beneficial. A lot of work has been done into developing products. A lot of things have been done into that angle. I don't want to judge for the past 9 or 10 months, but definitely before that and during the pandemic, we have seen ESG funds and labeling environmentally friendly products and sustainable products is definitely been picking up. So we have seen that already. What's happening in 2022 is a global thing across all asset classes, so we needn't judge on specifically this year. And we are seeing extra momentum, extra demand from investors, extra demand from institutions in order to have proper disclosures in place. Everyone is asking about it. What is your role? So I do think there is demand from investors and vendors in order to avail these products to the market. It's up to us now for exchanges and policymakers, regulators, in order to facilitate the flow of this information, the quality of the disclosures, and all of that.
Thank you. Over to you, Jean-Paul.
Thank you for giving me the floor. As you know, I would say sustainable finance is part of my day-to-day life. And I belong to the school of financial supervisor who think that there is no problem with self-regulation until the day that there are problems or that it doesn't any work anymore. And then we have to come to provide, I would say, with maybe binding framework like in Egypt for the aspect of like inventory. And that's maybe the challenge for labels, let us be clear. Because there are many, many very useful labels promoted by the industry in Belgium, other countries, in other countries. But I am, let us be clear, very prudent. Because if you have some banking industry promoting label with their own toolkits, the problem is that with this kind of, I would say, self-regulated label, you give the impression, I would say, to John and Mary in the street that they are on board the day that they invest in a financial product with this kind of label for a never-ending story. And that's a problem that we are facing, for instance, in Europe. Many products have been labeled, and then we have the new framework with product regulation, and you see that they are no more in line with the new requirement. Question for me, what happens with all the investors having decided to invest this product before, and then they will have to invest in product which has to be downgraded. So that's a tricky issue. So I am very prudent, at least for this, with this, because if we have too many products which has been downgraded due to new binding requirement at global level, what does it mean for the trust? Because John and Mary never invest in this product because there was a label, and the label is no more updated. That's the reason why I think that the main objective when we speak about label greenwashing, it's a global baseline at international level.
Okay, that takes us on nicely to you, Mohammed, and just wrapping in as well, more about the IASB and standard setting and how that framework can be brought to life a little bit more. The floor's yours.
Definitely having labels on the various types of bonds had helped investors to categorize their investments. The challenge would be how to ensure that these types of bonds who are labeled as green bonds, blue bonds, transition bonds, sustainability bonds, whatever name and type of bonds that we are talking about, how to ensure that they are achieving what they disclose to be achieving. So that's a different type of challenge. Having the labels and having the address of the type of bond that is being issued or the financial instrument is definitely beneficial, as it enables investors to decide what are they getting into when they are buying these types of bonds and what type of projects that they are going to be implemented according to these funds that are the proceeds of the funds. So starting point, that labeling of the bonds and having clear definitions and guidelines, and this is the role of regulators, honestly speaking, is to have clear guidelines for the different issuers, that if you want to do something in the transition area, this is the definitions of the different projects. How to assess it is another level of effort that needs to be done by regulators on the verifiers, validators, and I would say the engineers. Here it's not only a financial question to be asked, or it's not only a question of finance. It's a question of finance, plus engineering, plus environment. It's a combined area of skills and a combined number of skills that would enable investors to make sure. So that is a clear point for us. Legal certainty towards what is being traded. And the initiative that we announced today about having a carbon market for Egypt and Africa for carbon traded for carbon credits to be traded on them is quite important, and it would complement the recently issued regulatory framework that we issued in Egypt by amending the capital market law by doing the labels. I mean, the question regarding the labeling, we just issued, I would say, a couple of months ago, a clear set of definitions on the different types of bonds, including gender bonds and so on and so forth. But without having the investments, the investees that we're talking about, that are issuing carbon credits as well, so this will definitely complement the labeling of those types of bonds as being green, because you have a clear proof that they issued carbon credits that went through the entire process of validation, verification, and so on and so forth. I would agree with my colleague Jean-Paul on the ISSB and having a global benchmarking and standards. But this has to be complemented with capacity building. Capacity building for the one or the different types of regulators that have already adopted a mandatory approach, like the Egyptian case in the FRA, by having the TCFD as mandatory, because here we will be having or needing from the ISSB to come and tell us, okay, these are those types of regulations that or benchmarks that we are issuing from the ISSB, and this is how it is different than the TCFD, so that regulators can do their turn as well and do capacity building for companies. Another point, if we are aiming, and here maybe it will go beyond the role of regulators of capital markets and financial instruments, if we want to see a real dent and the real impact on the environment, the regulatory frameworks need to go beyond the capital markets. It needs to go beyond, it needs to go to private markets of finance, whereby it's not sufficient only for publicly listed funds or publicly listed companies to be doing the required disclosures. The regulatory gap is getting wider and wider by the hour, and this would be detrimental to public markets. We need to close the gap, or at least reduce the gap. And this is again the beauty of the ISSB standards, that is universal and applied to privately held companies and publicly held companies as well in that area. So bottom line, yes, labeling is important. The challenge is not about the labeling, it's about proving that what is being labeled is truly labeled the right way. Thank you.
Thank you. And just on that note, I'd like to take my privilege as moderator to congratulate Egypt for issuing the investment roadmap alongside the NDC this morning. So congratulations. From the banking perspective, Ahmed, I mean, you know, if from the issuing side, if you've got to do more work on the standards, you know, is that a help or a hindrance for what you want to achieve on climate goals? Sort of how do you view it?
Well, actually, this is a promotional or creating engagement sort of an issue. And in my view, deployment is about creating win-win scenarios and explaining to investors, creditors, and all players within this ecosystem what's in it for them. We have seen that with the IS standards when they have been launched many years back. They have brought greater transparency in the market, consistency, and standards across the globe. This helped investors to take informed decisions when it comes to deploying investments or taking credit decisions when it comes to financing. I expect that ISSB will have the same impact when they are released to the market. I mean, I would like to build on what Jean-Paul put standards, correct? And from that, we can build a taxonomy that can help us identify projects that are sustainability compliant, the risk that comes with it, reporting that risk, which will help people again to take informed decision when it comes to investments or financing equally. Regulators will have a huge role to play in this regard. And again, to Muhammad's point, this will be predicated, the success of that will be predicated in two very important things. First, deployment and consistency of the deployment across all jurisdictions, ensuring that there is a capacity built up so that no one is left behind and love is shared across all jurisdictions. The second component, in my mind as well, is reporting and how it is standardized across all jurisdictions. For a bank like Mashreq, for example, we report across multi-jurisdictions, and it's not beneficial to us or to our clients or our investors to deploy several reporting to entertain independent jurisdiction requirements. And I'm hoping with the ISSB launch and many of the initiatives that being explored right now amongst the regulators, a great soul will come into this, and we will see a much brighter side as we move forward.
Thank you, Chris. So from a City of London perspective, we've been working on standards for a while and implementing them. You know, how do you view the ISSB approach? Are you positive as well? What do you think?
Thanks, Zoe. Yes, I am positive. I think the International Sustainability Standards Board's creation of a global baseline of standards is absolutely of fundamental importance. I mean, one of the challenges that we have at the moment is we just don't have enough genuine, verifiable data. And that underpins the issue for me, to enable us to check, whether things are actually green or they're not green. And so that's a key challenge. But what we can't do is allow that to be an excuse for inaction. So we cannot allow the perfect, as it were, to be the enemy of the good. We really do need to make sure we are taking actions. And I do think the ISSB's work in creating that global baseline is of fundamental importance.
Okay, so time is flying.
I may add some comment about the next story called SSB. When we decide 4 years ago to discuss with the IFRS Foundation, it's because I would say we thought that it was the best partner on board. Okay? We had some discussions, a public secret, do we have to manage that by ourselves? I was one of the supervisors around the base saying no. We have the capacity to liaise with the IFRS Foundation, which is well known, I would say, for the successful journey having started 20 years ago with the endorsement of the famous accounting standards. Okay? And I think that I'm not objective as chair of the IOSCO, that one important, I would say, milestone was the fact that we decided to endorse the standard. What is the situation 20 years after that? IFRS accounting standards are now implemented, I would say, in more than 160 jurisdictions. Of course, they are carved out. The size of the disclosure is not the same. And when we start the discussion, my objective was to convince the IFRS Foundation to do it. At this time, not everyone was convinced, I would say, and it's quite common. It's about how to have people on board, knowledge, and we know that we start from scratch. And then the IFRS Foundation, chaired by Erkki Liikanen, an excellent former commissioner and central banker and Mr. Finance, decided to launch the ISSB. After 1 year, exactly 372 days, okay, you see that I can compute from time to time, better for our financial regulator. Here we are. Okay. They have an excellent, I would say, management, chaired by Emmanuel Fabressio, and I have the pleasure to see the new vice chair, Jing Dong, who is in charge for capacity building. Not the right man at the right place, I would say. They had the capacity also to launch, I would say, 2 prototypes, no draft. They have a complete board with people coming from all kinds of jurisdictions, not only about diversity between religion, but about gender balance and also about different backgrounds. So that means the technical background is not the same. People coming from the industry, people coming from the World Bank, people coming from the academic world. They were also able to merge with other good students. And that's maybe the difference with what happened 20 years ago. We have a lot of good students, the SEC, 500 pages, European Commission, Asian countries, emerging countries, working under the umbrella of the TCFD task force promoted by, I would say, by Michael Bromek and of course the GFANs, I would say. And that's, I think, the need, what we think that ISSB is the right choice, because they perfectly know what it means a global baseline, but also with interoperability. The fact that we have this dialogue and the capacity, if possible, to endorse, I would say, means for a global organization like IOSCO, with a majority of members coming from an emerging and market company. I come from Belgium, which is a 3 and 20, I would say 95% of the companies in Belgium are SMEs. It's not like in the Netherlands, I would say. So it means that I know what it means proportionality. And that's the reason why there is a new vice chair at ISSB to promote capacity. For me, it's about scalability, proportionality. The most important is that everybody will be able to catch the same train. And to catch the same train for me, it means for the financial account to be closed at the end of 2024. We must be able to have a toolkit for that, but also with sufficient toolkit about agency. And I'm pretty even confident about the capacity, because John and Mary industry are not waiting for us. Then the objective is to give the possibility to everybody to catch a train, but the speed won't be the same. The size of the train won't be the same. It's about carve in, carve out. We know what it means. It's a journey. It's how to go from A to B.
Okay, so we're rapidly running out of time, sadly, because I think this discussion could go on for a long time. And we've got one topic to cover in a very quick fire along the line response for me, please, which is, you know, we're starting to see the scale up of carbon markets, and this seems fraught with trust issues and credibility and, you know, subject to greenwash discussions. In sort of very brief comments from all of you, is there anything different that we need to do to maintain credibility in carbon markets, or can we just use the existing IISB direction of travel to tackle that area as well? In a very brief response, please. Thank you.
So, for me, there's no credible path towards the delivery of net zero without carbon markets. Let me state that straight away. Carbon markets are going to be a crucial tool for which to transfer money from the global north to the global south. No doubt about that. And for carbon markets to scale, like any other market, there's a crucial role for enabling standards. That's my voice.
Thank you for the question. That's a perfect timing, because we just released this morning 2 important reports about carbon market, one on compliance market and one regulatory market. And it has been managed by the STF, and you see there my colleague and friend from Spain, Rodrigo Mendoza, who is in fact managing the STF, and I think that Mark Manning from the British FCA must be somewhere in the room of trying to find a way to arrive on the stage. It's also a challenge, and also, and we thought that it was interesting and useful for everybody to come with some guidance. It doesn't mean that by definition everything is going wrong with carbon market. We know that there are excellent products. We also know that there were some accidents. And you know, from time to time, we have to draw some lessons from some accident. And that's the objective, the purpose of the 2 consultation reports. We already had a dialogue this morning with a representative of the industry, and I agree with you, we must be there in the picture in order to promote. And of course, what we are telling, it's about the implementation of well-known principles about market integrity, how to avoid conflict of interest. price discovery. There are also more specific principles about the legal aspect. And
Perfect.
that's what we are doing to the moment.
Perfect. Over to you.
Given that everyone is talking about standards, so enough standards, we agree ISSB, having a global baseline is quite important. I believe we need to start talking about something different and to complement our talk with standards for verifiers and validators and capacity building for them. If we want the carbon markets to grow sufficiently without being costly to the extent of being detrimental to everyone, to every young company, to every small company, we need to work on having a global baseline for validators, for verifiers, and to be as cheap and as affordable as possible for young companies, for small companies, for all of us to be participating in the carbon market issuances and carbon finance. Thank you.
Perfect. Well said. Over to you, Ravi.
We couldn't time it better. The previous session, we just announced that we're launching our African carbon credit trading platform in Egypt. And what we're trying to do, and definitely integrity and cohesive regulations, is key for trading carbon credits and making sure that these carbon credits are reliable, they're real, and there are an actual tradable instruments, enough for African credits being sold at steep discount. Because of that, we need to standardize, we need to place it at par with global credits. We need to come together, we need to unify standards, and we need to synchronize among ourselves. Thank you.
Perfect. And over to you.
I don't want to sound like a broken record, but I mean, carbon credits in my mind is existential if we want to deliver on our net zero targets. I know that it's very early on, but there are great efforts being developed. Governments around the region here, across the globe, and if public, private, and regulators increase the intensity of collaboration, I think that we're going to achieve great results in a very short interval. Thank you.
Thank you. I'm afraid that's all we've got time for. I've been most surprised by the fact that only 43% of people trust CEOs on climate change. I'm a bit disappointed by that. I hope by the end of next week we'll get that number up a little bit. But heartfelt thanks to my panelists for giving us such esteemed insights, and I'll hand back to the floor now for the next session. Thank you.
Thank you much, Ms. Zoe Knight. Thank you for the very interesting panel. Carbon markets and greenwashing were the highlights of this panel. I much to move to the hall on the other side, Ahmed's room, number P17, where there is a session about sovereign debt for nature and climate investment with a plethora of speakers, including Dr. Rania Mashad and Dr. Muhammad Naqid. Please move to the other room. We'll convene here at 3 p.m. Thank you very much for your attendance.
How are you? Zoe Knight. كويسة؟ Zoe Knight. I'm good.